Hacking into websites, national infrastructure systems, financial markets, and other important assets appears to only be increasing of late. These are just but a few of the recent incidents and headlines we have been seeing more of. And while B-rated Hollywood scripts often portray hacking groups as lone wolf packs of dark army nerds using their talents for evil, the vulnerability we collectively increasingly leverage our economic well-beings on is being threatened by sovereign state-sponsored attacks from the U.S. empire's rivals, countries like Russia and China. Well, early this year, the Economic Forum, the same organization that has told us we could by 2030 own nothing and be happy, those who perhaps think their ideas on how the world should evolve are no longer up for real debate, well, they published a short 100-second warning about the size and scale of the looming threat to our increasingly digital ways of life. Have a look.
The COVID-19 pandemic has shaken our economies and societies to the core and shown us how vulnerable we are to biological threats. In the digital world, similar risks are being overlooked right now. A cyber attack with COVID-like characteristics would spread faster and further than any biological virus. Its reproductive rate would be around 10 times greater than what we've experienced with the coronavirus. To give you an idea, one of the fastest worms in history, the 2003 Slammer sapphire worm, doubled in size approximately every 8.5 seconds, infecting over 75,000 devices in 10 minutes and almost 11 million devices in 24 hours. Fortunately, at least until now, cyber attacks have not impacted our health the way pandemics have, but the economic damages, and therefore the impact they have had on our daily lives, have been equal and sometimes even greater. You see, the only way to stop the exponential propagation of a COVID-like cyber threat is to fully disconnect the millions of vulnerable devices from one another and from the internet. All of this in a matter of days. A single day without the internet would cost our economies more than $50 billion, and that's before considering the economic and societal damages should these devices be linked to essential services such as transport or healthcare. As the digital realm increasingly merges with our physical world, the ripple effects of cyber attacks on our safety just keep on expanding at a faster pace than what we're preparing for. COVID-19 was known as an anticipated risk. So is the digital equivalent. Let's be better prepared for that one. The time is now.
Perhaps you too are old enough to remember that large power grid failure in late summer 2003. I do, and I recall working my summer job in Cleveland, Ohio out on a golf course that day when there was a major power outage on the east coast of the USA and Canada affecting 50 million people at the time. While it's likely still debated as to what caused that 2003 power outage, what is not debatable is that even now, nearly 2 decades later, we still collectively remain vulnerable to the negative effects of ongoing cyber attacks. Now, I don't say this to overwhelm or shut down our minds with fear. This increasing trend is just merely one of the reasons I sleep sounder at night knowing an outsized portion of my wealth is allocated tangibly in physical bullion that I maintain direct control over. Put simply, bullion you can own outright, directly. It's very hard to track, hack, and steal outright. In an increasingly digital world, prudent bullion allocations make more common sense than perhaps ever. Hello on behalf of SDBullion.com, this is James Anderson. Before we continue on this week's SD Bullion Market Wrap, do me a favor and smash the like button so we can get this content delivered to more like-minded viewers who might also benefit from this information. We had yet another sideways week for the silver and gold spot price markets denominated in fiat Federal Reserve note terms. Silver and gold continue to battle with spot price levels of 28 and 1900 respectively. Hat tip to this funny, cynical tweet of the week, citing how silver was again set to meet its recent 27.99999 resistance level over and over again. The spot price gold-silver ratio did slip down one, closing the week at 67. The biggest silver and gold related news of the week was how high the latest official CPI data was reported at. The Bureau of Labor and Statistics, one which routinely underreports real price inflation ongoing, cited that U.S. consumer prices jumped 5% in May 2021, year over year. Perhaps like the private Federal Reserve's running mantra that this increasing inflation phenomenon is only temporary and transitory, mainstream financial media headlines apparently are also trying to misdirect investors by pointing back to the summer of 2008 with their leading article headline. Here you can see how tiny that miniature CPI ramp was in comparison then versus now. More importantly, we look down to the CNBC article's bullet points to read that the 3.8% rise in the core inflation rate, that which excludes also rising food and energy prices, was the sharpest increase in nearly 3 decades. Bloomberg's John Authers stated the obvious point that while this inflation rise may be transitory, it remains hard to ignore the fact that CPI is the highest it has been year over year in almost 30 years of time. The trillion fiat Fed note question on many investors' minds right now is, will this current moment mark a line in the sand when an undeniable inflation sea change took hold and perhaps proceeds for years and even decades to come? Putting this headline into the context of our exploding fiat monetary base M0 figure, it was just updated to have now cleared 6 trillion. It's irrefutable that U.S. consumers' fiat Fed note savings are losing more and more real goods and service purchasing power year after year. This chart illustrates the 21st century consumer fiat Federal Reserve notes purchasing power. I wonder if you too can see a trend here. Governments and their central bank partners continue to increasingly buy large swaths of monetary gold bullion reserves. Both Hungary and Thailand, the last few months, have purchased more billions worth of official gold reserves. If you've been following our SD Bullion channel here for some time, you might recall a video released near the end of 2019 illustrating how the government of Poland moved nearly 100 metric tons of gold bullion from London to their central bank vaults. If you're wondering how large an amount of gold bullion that is, stay tuned to the end of this video for a click-through link to that story from some 18 months ago. In terms of the silver market's coming move in the short and medium term, I cannot tell you with absolute certainty where we go. But I can show you that technically, and also fundamentally speaking, silver is poised for an upside surprise, perhaps not too far in our near future. In the top right portion of this 21st century silver chart, we illustrate a coil market pattern ongoing currently with silver in fiat Fed note valuations. The chart reads, coiled markets are most often observed in commodities and forex markets where hedgers or government policy may create temporary distortions in prices. Coiled markets happen when the market has been held artificially downward. Commonly, a coiled market snapback will occur in the commodity markets such as gold and silver, but can befall any market. We end this week's update by looking at the silver and gold markets spanning this entire full fiat currency era in relation to their respective 200-day moving averages ongoing. While both silver and gold appear to be forming and possibly breaking out in the future from these powerful cup and handle formations that they're building, if we quickly examine their percentage deviations in the 21st century bullion bull market versus the last 1970 to early 1980 versions, we can glean that neither precious metal has yet produced the type of quick upside percentage deviations that they achieved in either early 1974 or in early 1980. And judging by the recent sharp increases in U.S. price inflation and the unprecedented fiat currency creation by central banks of late, not merely in the USA but also globally speaking, the coming potential upsides for both silver and gold bullion still have a long historic way to go before they reach record levels on a relative basis to the last major secular bullion bull market of the 1970s. My hope is that those of you out there can get prudently positioned sooner now rather than too late or later on in order to benefit, protect, and enhance your wealth in the coming years. That's all for this week's SD Bullion Market Update. At the end of this video, in the comments and description below, I'll also leave a link in a click-through interview I did yesterday with the Wall Street Silver team. We covered a wide range of opinionated topics, which I'm confident many of you will find interesting and perhaps insightful. And as always, to you, the viewer out there, take great care of yourself and those you love. If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content. Give us your thoughts in the comments below. Let us know what you think and which topics you want to hear more about.